In this video, we're going to be talking about market structure. We're going to take it right back to basics to make this as easy as possible for you to understand as if you were a complete beginner. We're going to look at the very beginning. What is a bullish market? What is a bearish market? How to identify them? How you can determine when you've had a break in market structure, and how you can determine when you've had a change in the direction of the market structure. Okay, so let's get into it. Okay, so you can see I've got a couple of diagrams drawn here. All right, so this is bullish order flow. And how do we determine what is bullish order flow? We're going to be looking for a series of higher highs, as you can see here, and higher lows, as you can see here. Now, in order to determine a higher high and a higher low, we're going to be looking for the first point that we find a high, followed by a pullback. Once we've had the pullback, we can determine that this is a higher high. Then it reaches the lowest point here before it carries on going bullish. Once it goes past this point here, which is the previous higher high, we can mark this as a break in market structure, okay? And we go on to form a new higher high. The same thing happens. We have a pullback, then we carry on bullish, we form a new higher low, we get a break in market structure, we make a new higher high. So we get a series of higher highs followed by higher lows. This is what makes bullish order flow, okay? And along the way, when this happens, at each time we break a higher high and we break market structure, this is commonly referred to as a break of structure, or otherwise BOS, over the top of a line. If you see people marking that on the charts and you didn't know what it was, basically that's all it is. It's a break in market structure and a continuation of a trend, either to the upside or to the downside. We've determined that in order to get bullish order flow, we need a series of higher highs and a series of higher lows. And as this happens, we'll get break in market structure. And the same thing happens here for bearish, but the opposite way round. We need a series of lower highs and a series of lower lows. And each time we break a lower low at this price point here, we create a break in market structure to the downside. This is giving us a bearish boss, okay? A bearish break of structure or market structure break. And then we get a lower high down to a lower low, pulls back up to a lower high. It doesn't take out this high here, okay? And this is what's keeping it bearish. As long as these lower highs stay intact, okay, and we keep going down, we can keep getting break of structure after break of structure after break of structure. Okay, so what happens if one of these highs do get taken out? Okay, at this point here, let me get my little tool. Okay, and I'll do it here. So if we've got some bullish structure here, okay, and now if this comes back down and breaks this structure here, okay, and then goes back up here, well, what we've got here, and we'll go through it the same way as this and draw it out together, we've got a higher high here, okay. At this point, when this price level breaks this high, we can draw a line on here, and this gives us our break of structure. The same thing happens here. We've got a higher high, and at this point here, we break that structure. So we get another break in structure. Now this price here, it didn't stop, okay? It came down and broke this higher low. It didn't stop here and go back up and continue a bullish trend. So what happens here, when this low gets taken out, okay, and we break this price at this level here, right, we get a new lower low, okay, and when we get a new lower low, and it's the first break to the downside after a bullish trend, okay, this is not called a break of structure. This is a change of character, market structure shift, or whatever kind of terminology people call it, different things, but for today we're going to call it a change of character, okay? So if you see this on people's charts when you're looking and trying to learn market structure, basically that's what it means, okay? It's a change in direction of the market, or a first possible change. Now, there's nothing to say it's going to start going bearish from here. It may just come down here and carry on going back up here, okay, and carry on bullish, in which case this would be classed as a liquidity grab, right? But we're not going into that today. We're just looking at the market structure basics, okay? How a break of structure forms, how a change of character forms, how we can determine bullish order flow, Okay, so that's all here on this screen. I'm very quickly going to jump down onto the chart and show you how we can map this market structure to it so we can find our highs and lows on the actual chart. Okay, so let me turn off the indicator. All right, I'm going to draw a line down here because we're going to go from here. This is our starting point. For this video, there is nothing this side of here. All right. Okay, so we're going to have a quick look on the chart, how we actually determine where the highs and lows are and how we can map these on the chart. Now, people map structure different. What I do here today, somebody else is going to show it completely different on a video. It's what works best for you, okay? So there could be 10 different ways that people map structure and what validates a high or a low for them. You need to find what's right for you and what works best for you. For a mechanical way, and that's what I'm looking for, methodical and mechanical way to map structure that is the same every single time. It doesn't matter how the chart moves. All that matters is I know how to plot my highs and lows and when a market structure break or change of character happens so that my mapping is the same every single time. We're going to assume, like I said, there's nothing to this side of the line and we're going to start here. Okay, I'm going to zoom in really close so we can see it and make it easier. All right, so we can't see anything this side of the line. We're starting from here and we're going to find our first highest point. Okay, so I can find it right here, and this point looks slightly higher than that point. No, they're almost the same. Okay, so we're going to go from here, and this is our current high. Okay, so as we move down, we can see that this candle here closes, and this is the close. This is a bearish candle, so it opens here and closes here. So we're always looking for the close of the candle, and when the candle closes below, when we're going bearish, the previous candle's low point, which is here. Okay, so it closes here, but this bottom part of the wick, this is the low point. So when it closes below there, we have confirmed the high. Okay, so in order for the high to be confirmed, we have to get this close below. Okay, so let's grab this, and now we're looking to cement a low. And it's the same way as with a bearish candle, but this time we're going bullish, okay? To cement a low, we need to see a bullish move, right? So here's the low, and we can confirm this low with this candle's close right here. This candle closes above the previous candle's high, this cementing the low. And as we break this structure, we can look back and see, okay, this is the high. All right, and now we're continuing down. After we break the structure, we're continuing down to find the new lowest point, which we find here. But at which point can we cement this as a low? When do we get confirmation? Well, it's not this candle here. It doesn't close higher than the previous candle either. On this candle here, well, it does. We get a close above the previous candle's high, and now we have a confirmed low. Okay. So now we have a range, okay? So between this high and this low, everything that happens in between these two lines is classed as internal structure. And I'm going to pull this across so we can see where our range lies. And we can see then, even though this move comes up here, and right at this point, this candle closes below this previous candle's low, which would give us a high here ordinarily. Because we're inside our current high and low range, this is all internal market structure at this point. Okay, and we're looking at main structure, so all we're going to do is follow this through until one of these lines are broken. And it first comes at this point here. So what do we get here? We have a breaker structure here, and so this would be another continuation of this downward trend. We don't have any breaks to the upside, no breaker structure here, no breaker structure here, so this is another breaker structure. Okay, so we can call this a boss. We can call this a boss. Okay, and so now we're looking for the low. Okay, well, we've got a low here, and we've got this candle right after it closing above this candle's high. So this candle is the low candle. And so we can put our low right here. Okay, so I'm going to go straight across here because we already see that it breaks at that point there. When this candle breaks here, okay, we have a new high. Okay, and I forgot to do that on this one. So I'm going to pull this one back because once we get a break in market structure, the new high is the highest point between where the low is formed and that price point is broke. So now we're looking for the highest point between these two candles. That gives us our high point for this part of the structure. Okay, so I believe it's this one here. Yep. Okay, and that's the high point for this structure. All right, now we've got another break here. So our high point is here. Okay, and I'm going to run this all the way across because we can see it breaks structure at this candle here. So now we can determine that our low is right here. Okay, so it gets pretty simple once you've got your range in place and we're just breaking structure. So the same thing occurs here. We've just broke the high, we've confirmed a new low with the break. Now we're going to determine where our high is so we can get our range. Okay, so right here. Okay, so we're going up, we're going up, we're going up, and we want to determine the high point, which looks to be here. Okay, I'm going to put my high right here, and we cemented this high because this candle closed below the previous candle's low. Okay, and now we have our trading range again. Everything in between this high and this low is internal structure. In order for a new high or low to be found, this range has to be broken, either bullish with a break of this high or bearish with a break of this low. Okay, and as you can see right here is where that occurs. Okay, pretty simple, right? So what did we get here? We had a break of structure, a break of structure, and a break of structure. Okay, and what is this? Well, this is a break to the upside, and it's the first one after a series of lower lows, lower lows, lower lows, lower lows, and now we've got a higher high after some lower highs, lower highs, lower highs, and lower highs. So that determines that this is now a change of character, and it's actually a bull chock. It's a bullish change of character. This is the first sign of a possible, and I emphasize possible, change of direction. So like I showed you up here, where are we? When a chock happens, it can come down here, okay? And the possibility is that this may stop here and then continue to go down, which changes it to bearish, or it could continue its run up. In other words, this, when it stops here, sweeps the liquidity from this low, and even from this low. So as we look on the chart here at what we've got, this change of character did just that because we continued bearish from here. It comes back up here and it sweeps these two previous highs, which could be classed as a double top, even a triple top. Okay, it sweeps the liquidity above here and goes back down. We're not going to talk about liquidity, we're not going to talk about buy stops or anything in this video. It's just market structure. But here's the demonstration on what happens when you get a fake chock. Okay, it's just coming up to grab the liquidity above here. And if you want to know more about liquidity, I'll be doing some videos on that in the future, but in the meantime you can just search up liquidity on YouTube and you'll find it. Okay, and then it comes back down, and because we've had a chock here, this would then be another change of character, and it would just continue on like that. Okay, so that's how we map market structure. Okay guys, so there is another way to actually map your market structure. It's really simple. All you need to do is get ArtiumPro SMC indicator and chuck it on your chart. Just click one button and all of these lines are drawn for you. Okay, you can see all of your main external structure. If you go into the settings, you can even turn on internal structure and it will show all of the internal structure for you as well with these dashed lines. Okay, and that maps out your internal structure for you much easier. Okay, so that's ArtiumPro SMC indicator. You can grab it from the link in the description. And so that is the very basics of market structure. I hope you've learned a little bit. This was for you if you knew absolutely nothing about it. If you did understand market structure and you watched the whole video, I appreciate you watching. And don't forget to give the video a thumbs up. Go ahead and subscribe to the channel and we'll see you in the next video.